All right. This is our last panel of the day, and I asked the Financial Payments Authority of Ireland, an association? FPAI, all right, FPAI, if they would do a panel on FinTech for us. I know Pat Harker's outside. I've asked Pat to come in. For those of you who don't know, Pat has responsibility for FinTech in the U.S. Federal Reserve System. And that's the entire Federal Reserve System, not just Philadelphia. So today we heard John McCarthy, who's being interviewed by Bloomberg right now, and I think John will be back. John, if for those you panel members, John McCarthy is chairman of ING Bank Middle East, and which covers both Turkey and all the stands, Uzbekistan, Pakistan, et cetera, et cetera. He told this audience that they just acquired, that ING acquired Kabbage, K-A-B-B-A-G-E. So there's obviously a great interest in this area. The GIC is going to do a FinTech panel in San Diego come February, where President Harker is going to be one of the keynote speakers. But anyway, today we have Frank Kelly, Senior Legal Advisor, Bank of Ireland, right here in the next to the end there on the far side. Charles Dowd, CEO of Plink, right here. Brian Fahey, CEO of Terra Nua, who spends his time between New York and Dublin. And the moderator says Anna Scally. Now you can tell that Anna's not sitting up here. That's Richard Walsh is committed to sit in for Anna. And Richard is the chairman of the FPAI. So without further ado, I'm going to turn this over to Richard, I think, to start this. Thank you.
Thanks, Bill. Yes, we're looking on the floor. Anna really let herself go. She actually wasn't able to join us today. But what I'll do, I think, to kick us off, I'll ask the panelists if they could actually just talk a little bit about their business and perhaps talk about some of the challenges and the realities, if you like, of building or operating or transforming into a FinTech business. Do you want to kick us off, Brian?
Sure. My name is Brian Fahey, and the company name is Terra Nua. We mostly operate as a brand called My Compliance Office. And we are, I suppose, somewhat a poster child from an Irish context of we came out of Fidelity Investments Offshore Development Group here in Ireland. They had about 600 people in Ireland back in 2008, and we were really a spin out from them. And what we do is we're very much, I don't know, there was no such thing as a FinTech when we got created, and there was no such thing as a RegTech, but that's probably what we are today. Effectively, we do compliance monitoring solutions, primarily in conduct risk. So we would divide that into sort of three groups in financial services. They're about monitoring all the code of conduct, conflict of interest activities for employees, things like guest entertainment, personal trading, outside business activities, and effectively monitoring the policies and procedures of an organization there. We also do it in terms of third-party monitoring, vendor risk management, those kinds of activities. And the last part is we do a lot of trade surveillance, and in a compliance context, suitability, product suitability, mostly in the securities space. The first two, where it's employee code of conduct or third-party risk management, is all in multiple industries, but pretty much our entire client base is the financial services, and in reality we have a big bulk of securities, capital markets firms out of the US, which is our primary market. So I think, from an Irish context, building a business and building any kind of a fintech business, I would actually say stay away from Irish institutions. That's not where the market is. And, whatever country you go into, you do have to look for volume in that business. For us, when we had a securities background, the place where the volume of institutions that buy software or solutions is obviously the US. And that has to do with going back to, the split between where, banks and securities business. And so you end up having, nearly 10,000 firms that are what they call registered investment advisors in the US, but that is a huge volume of firms you can sell to. So, if you are thinking about a business idea, whether you're a regulator or whether you're a practitioner, the key is thinking about first starting where is that market? Where is the volume of potential customers? So that'd be the first thing I would say. And the second thing I would say is do not, in the reg tech world, don't confuse need with demand. And by that I mean, there's so many things that risk and compliance people should have in their organizations and ideally would have, and these wonderful all integrated systems. The reality is not, only a very small amount of their needs as organizations gets filled from a budgetary perspective, which is where if you're creating a technology firm, you want to go where that budget is going to be. And that's what you want to focus demand on. And the part that's related to that in terms of building a business in the reg tech space is it's not about regulation. It's not about where the regulation is. It's about where the enforcement is, because the enforcement creates the budget. And that gets, I end up hearing about firms or people, whether they're in regulatory environment or whether they're in, a financial institution saying, this is really needed in compliance or risk or whatever. And the reality is unless there is enforcement, there's no budget to buy systems in that space. So there are the few things I would think about from building a fintech business or reg tech in particular.
Charles, as a startup, first of all, if you tell us a little bit about Plink and then some challenges and realities.
Cool. So my name is Charles Dowd, and I'm co-founder of a very small, fairly early startup called Plink. Plink is the sound that money makes when you drop it in a jam jar. And so what we're doing is we're building a consumer product. For anybody who's from the US market, you would recognize a product like Venmo. So it's a little bit like Venmo meets WhatsApp together in one place. We built a product based on it being 3 Fs, we call it. So it's fast, which means money moves instantly, same as a message moves instantly, or a text, a photo or whatever moves instantly, money moves instantly. That means value is actually transferred to the recipient instantly. Once they get like a ping on a messenger, they have the money to spend right away. It's a very important part of our product. The second is obviously free. Free is very important. Money should be, if I give someone $10 or €10, it should be $10 or €10 at the other end. That's how it works if our competitor is cash, essentially. And then the most important piece we try to work on is making the product fun. When I say fun, I mean focus on user experience. So user experience is really about, is there a way I can provide ability for someone to be, for their own creativity, to actually become good at something, and tell a story and have some fun. And so I'm trying to do, if we put fun and money together, we can hopefully fix some of the problems that small amounts of money cause between friends. That person that you don't speak to anymore because they always stiff you on dinner or whatever. Those kinds of things. What we're actually trying to do really is make it so that it's sort of a social contract between people, that you need to have money in your Plink account. So if you're going to go for beers and pizza, so that you can actually settle up and you can't wait till next week or the week after. And that has actually created a whole pile of problems for us to actually build a product like that. So we're not a regulated entity, but we're actually, we operate in a regulated environment. So at the base of our product, we work with a credit institution which holds all the money. And then we work with a payment institution which allows us to third party into their license as a payment institution, in it using what's called a trading as relationship, which is a lot of fun. Um, and then on top of that, then we actually have built a product in the way you would build a modern, web-based consumer internet product. Everything's on AWS, Amazon Web Services. Everything runs there. Everything's loaded there. It's taken 2 of us about a year to build the whole product. And that means everything from doing all the branding, doing all the customer feedback, interviewing people, building products, testing it with people, and we're probably going to launch in about 17 days. That's the current plan, and kind of excited about that, but obviously means that I'm working till midnight every night. But what it means, though, is it creates all these wonderful challenges for us. For instance, I'm an engineer, so when I ask a question, if there's a binary response, it's always good to get a binary response. The challenge with the regulator is that if I ask the regulator a question, I get a graded response. I'll get somewhere between yes, maybe, maybe not. Try it. If it's not working, we'll tell you, right? So that's a really difficult situation to be in when you're trying to build a business with some sort of sense of, of purpose in it. So for instance, we started off, our name was BYNK, which is Bink. And after about 9 months, I got a letter from the Central Bank of Ireland saying, actually, Bink sounds a lot like the word bank, and you're not a credit institution, therefore you're not a bank, therefore you can't use that word, you have to change your name, and here's 14 days to change it. So I always say that I'm really happy because I'm probably the only person who got a definitive answer from the regulator that said, don't do something. So I feel that's good. The other side of the regulation is that actually building the core of our product is actually very easy for us, right? We're engineers, we can build products. I can build a ledger system. It takes about a week to build an entire ledger system that actually works for us. Problem is I can't use that ledger system. I have to use a third party because to hold the ledger, I need to be licensed. And so that means that my payment institution holds a ledger, and therefore they can charge me whatever the hell they like in order to get access to that, because that's the barrier to my license. But if I go and ask for a license, I can't do that until I actually have an operating product in the market, so I can actually bring a product to the regulator to explain what it is, which means I have to actually find third parties to work with and invest in those third parties, and then build a product, and then go and actually go back to the beginning and actually rebuild everything from scratch. So it's actually quite good fun, but it's also quite challenging. And so far, obviously we're not in the market yet, but once we're in the market, then obviously we'll know whether our product works or not, and that'll be fun. Sorry.
Frank, as one of the companies you can charge what the hell they like for the ledger.
Absolutely. Obviously, I'm here to represent the incumbent dinosaurs who are going to go extinct in the context of fintech. I'm not setting up a new company. I don't have a sexy story to tell. We've been around for years. We're the regulated entity that charge whatever we want. But I think one of the things in this environment that we benefit from is the experience of dealing with regulation. And for me, one of the biggest barriers and challenge for the fintech community is regulation. Both having to adhere to it and understand it. It is undoubtedly a barrier. My view slightly would be that I think there's a bit more focus on the tech rather than the fin, which is no bad thing. But that tech mentality doesn't sit squarely within a financial services environment. We can't afford to operate beta versions or start selling vaporware or things like that. So we need to know what it does, when it does it, how it does it. We have to tell our customers all of that information, all our fees, charges, everything up front to be very, very clear. So it's difficult to try and come to market within the fintech environment and get to grips with all of that. And that's just one of the difficulties I've seen. The other piece, I think we'll touch on the compete or collaborate later, but in terms of collaboration, without giving away my position, interoperability is going to be a big challenge as things go forward. We will see under PSD2 the open environment and the API operating environment, but we need to ensure that there is interoperability between the two sides, the fintech and the bank, because from my perspective, we are ultimately going to work together. So standardization in that space, I think, will facilitate. So I'm always encouraged through engagements with the fintech and payments and the banking and payments, both sides of that payments coin, to try and get the two sides talking to each other and advocate for, at a European level and wider if possible, standardized interoperability through APIs or otherwise. The other big piece that I think fintechs will struggle with if they're going to collaborate or they're trying to generate uptake is, to a degree, confusion. There is a lot of offering out there. So you hear about Bitcoin and blockchain and Ethereum. So if you're trying to get the banks to buy into something, you may run into the old beta VHS debate and the financial services institutions wanting to ensure that they back the right horse. It is an investment piece. And I suppose the other piece in terms of struggle is an operating or a business model. We've seen a lot of customer inertia generally. We're 10 years into contactless cards and they're only just taking off. We've heard a lot about Apple Pay and mobile payments, but in real terms, I'm not sure they're really catching on. They will undoubtedly in due course. But if a customer is looking at their phone or their card and going, why would I use my phone? My card does the same thing. It's trying to persuade them or show them that a solution is more secure or that it's better for them. So I think those ideas of understanding the regulatory environment in which they're going to have to operate and then persuading people to take them up on their very kind offer of a wonderful new solution and way to make payments or operate within the financial environment are the two biggest challenges for me.
So after pouring cold water on fintech, then what do you see as the actual opportunities in fintech?
Clearly PSD2, a new innovative approach for, in terms of its object, promoting innovation. The banks, whether they like it or not, now have to open up, so we are mandated and must open up. So the access to data is going to be significant. That access to data allows the fintech community to operate in a much more informed way, whether it be in lending circles or just general operations. Banks have had access to the data for years, arguably haven't used it properly. Data analytics is, to a degree, and I suspect in a number of the Irish banks and globally, in its infancy. We've had all this information that the likes of a Google or an Amazon would make significantly greater use of in addressing their customers' needs. And I think that access for the fintech environment is going to be huge. So I think that data piece is the main for me.
John, do you see PSD2 back to you guys, or what do you see as the opportunity?
Yeah, so I think there are lots of opportunities. I think the biggest opportunity is really about around user experience. I think that technology-led companies actually they can build betas and they can innovate around the user experience, around the front end, assuming, of course, that the back end works. So, the internet's actually a very reliable piece of infrastructure, right? It actually works all of the time everywhere in the world, which is actually pretty amazing. An SMS infrastructure is incredibly robust. It's actually used as two-factor authentication for almost everything. So those kinds of things are how we've got to think about banking, right? It's like banking is like this infrastructure. It's really important, and it will always be there, and it's like the internet or like SMS. But actually, what you find is that the carriers run SMS, but actually the winners in short messaging are WhatsApp, right? Or WeChat, not the actual carriers themselves. And I think that's an interesting one because the user experience is different. The user experience is really about putting the user at the center of what you do, actually putting them at the center. So to commend things like, say, Bank of Ireland, it's an amazing company. Everyone believes that with the money in Bank of Ireland that it's there, and if you move it from one person to another, that it moves. Everyone absolutely, I think the NPS scores and functionality for something like Bank of Ireland are very strong. The challenge is actually when it comes down to how does the user feel when they do this? Do they trust that the bank has their best interests at heart? And I think that from 2008 onwards, I think that NPS score dropped very heavily for everybody, and there's a huge opportunity, I think, for banks and fintechs to work together and actually work out how to drive up the NPS scores around the emotional branded relationships. And actually, I think that's a giant opportunity at fintech that I think will drive it forward. The other part is that you get a bunch of people who are who come at it from a technology point of view and go, okay, thinking large scale solutions and go, let's find a large scale solution to communicate with the customer. But we're used to actually going and finding infrastructure providers that actually have things that work. And I think that's really important as the sort of the model of the future for us.
Yeah, again, so we're very much sort of back office processing. We're certainly not nowhere near a consumer or anything like that. And it may sound trite to say it, but it's echoing a little bit around, what the internet does is create a communication that never existed before. It's a sort of a standard way to have, even if it's not consumer to business, it's business to business, it's employee to a system, it is, and I think the whole what they call software as a service, where, it's not just software as a standalone piece of thing that I've got to put data into it, but when you have the internet, you've got the communications all set up for you, you've got a standard ubiquity of devices to access that. And when you're in the back office type world, there's huge opportunities to replace older, clunkier systems that are standalone software systems. The software is easy enough. From a tech perspective, it's very straightforward. What very much is difficult in a back office type world is having the right data with that software. And I think there is a huge amount of opportunity still in the SaaS world around back office processing for financial institutions. The reality, I think, just echoing something that Frank was saying early on, the financial services world does not move quickly. It is very slow to, put in new, I suppose you're looking at more from the sort of payment side and sort of the devices that gets used. But even on the back office or in the reg tech world, whenever I say to somebody, they say, well, we're in compliance software, and they will say, oh, that must be great, compliance is getting, there's a lot more regulations, a lot more activities. But the reality is it moves very, very slowly. But so the opportunities are still there to replace a lot of sort of back office systems, add data to your software offering, because as a internet-based hosted offering, you can bring in all the, in our case, let's say you're bringing it, if you're doing third-party vendor risk management, you can bring data about companies from single sources into one place, and then all your clients get access to it. The same way we've a global security master for things like trade surveillance, we have market data. And mostly, a lot of institutions around the world, when they're trying to do this back office or compliance monitoring or whatever it is, they're still working off internal systems kept by internal IT teams. And I worked inside a financial institution for many years, and I was that IT person trying to make all these things work. It doesn't work. It's impossible. You get asked to do too much, and you don't have the domain knowledge. So there is still this opportunities in that back office world, in the reg tech world, whatever way you want to call it. Put it on the internet, add data to it, and then do all the typical other difficult activities like branding and access and a million other difficult challenges. But when you talk about opportunities, I think there are still plenty of opportunities in the software as a service world. And it is unbelievable from a technology perspective, the difference it is around having a standard communication method that you can have business to business or consumer to business, and the devices all work the same. It never used to be like that. And I think there's still lots of opportunities in that space.
And I think I was reading the KPMG produce every year top 50 fintechs, and they were looking at Ireland's top 50, and we were just talking before we came in, finding about 20% of 10 of the top 50 are now in the reg tech area. There certainly seems to be a real interest and enthusiasm, possibly driven by the regard Ireland is a real burden on reg tech.
Yeah, I think it's also related to one of the original points I was talking about. Where there's market volume, where there's a larger number of institutions, it becomes more difficult in those jurisdictions where there's a small number of dominant institutions. So, there's 4 in Ireland or whatever it might be. You even go to Australia, you go to South Africa, you go to some of these places. It's a small number of institutions that you're really dealing with. But if you go to a place where there are volumes of financial services companies in the area that you're working, what you're bringing to the table as a product, that's where you can go in, and it's a standard thing as a software as a service place. You go in with a very effectively priced that mostly does the job. It may not be as good as what the tier ones have, but you can repeatedly go into these sectors with a product and replace what's out there by having it very, very effectively priced. And it usually is a better solution than the in-house solution, and it's very easy to like go in, not easy, but it's available because, you know, trying to get traction in the market is always challenging, but it's available to go in at that mid-market, well priced, and then over time as an organization you can build up your feature set and you can do more with it. So it's a great opportunity in those things, but it goes back to where are there volumes of buyers in that particular space that you have a product for.
And do you think that sort of increase in European legislation will allow you to develop a much bigger market, or national discretions going to?
Well, I think two earlier points here. The first thing is where there's standardization of regulation, standardization of expectations of how the solution will work, that only helps everybody. It helps the whole industry. It helps anybody who's providing it, whether it's an existing financial institution, whether it's a startup, whether it's a mid-sized organization like ourselves. That standardization is makes everything. I remember looking at an IOSCO report around something that we sell as a suitability product, which just means, is this investment product suitable and appropriate for the buyer? And they actually went around the jurisdictions of the world, and the principles were the same in every single place. And in reality, that I think people know and realize is the principles of maintaining and having a good regulatory environment, and people copy each other's principles and all that. So the more you can have that, the better it is for across financial services generally, businesses, consumers. It's good for startups. It's good for existing institutions, So I think from a European context, that is a huge advantage for European financial services organizations not to have it sort of different per jurisdiction.
Frank, what do you think the future will hold up to? The last couple of years we've been talking about bank killers and alternative banks coming in and head-to-head competition. Do you think that's the way it'll go, or will we see more cooperation?
I think cooperation is definitely the way forward. Certainly when fintech kicked off in the massive original hype, they were coming to steal our lunch. There were significant revenues there, people looking for their share, but arguably better ways of doing it. But I think that has calmed down a bit now. There was a good, very recently published report from Starling Bank. Their Revolution is the title of their predictions and challenges for 2017. One of the themes there, oddly, I suppose from my perspective, they felt that, perhaps fintechs had lost their way and they weren't as disruptive anymore, and they were supposed to change the world, and they'd taken their eye off the ball. And there was a sort of I was taking a negative attitude towards the banks, and the view was that if you actually look at fintech investment, who's pumping money into fintech, who's partnering with fintech, it's actually all banks. So the view was that the banks are coming around the back of the scrum, so to speak, and stifling competition that the fintech revolution is supposed to bring. I think it's just the start of the collaborative environment. We're moving away from that initial idea of competition, and I think it's everybody's benefit. We certainly within the bank, we have a number of programs to deal with or engage with the fintech environment. Think of Inc. when they started out, they changed their nasty name. We operate workbenches in some of our branches, and we have start labs where we engage with them. We actually provide, we only are one of the very few free workspaces for startups. There are plenty of places around that charge, and it might be nominal, but we let the guys in for free, give them somewhere to work, a cup of coffee, and off they go. And in 17 years' time, the cow will calf. But there's a very good mix there. We kind of leave them to themselves. We chat. We've worked with a few different startups and companies that we've seen move along, and we explain to them how the big boys work and how things operate in the real world back to regulation and what we expect of them. And if you're going to go in and try and engage with corporates, you're going to need a proper business plan, you're going to need details of your IT security. We get the benefit of seeing how they work. There's a sort of cross-pollination of cultural differences. The agile, the failure is an option, and the speed with which they move. So we're kind of holistically working together by osmosis, learning from each other. So I see that then coming down the line where our back end, our legacy systems, which will ultimately change over time, but what you hear about the big financial services providers generally is their difficulty with the legacy systems. So rather than try and develop the new front end, this is where the collaborative piece comes in. We engage with the fintech. They are better at dealing with data at the moment. They provide the more meaningful customer experience, the user interface. And so the trust that the customer has in Bank of Ireland will be enhanced by working with the likes of Blink or others to provide the direct interface with the customer on their smartphone in a way that they're used to in the modern social media environment. So I really do think it's working together.
Charles, at risk of your supply of coffee being cut off tomorrow, are you a bank killer or a bank saver?
I'm neither of those things. I think, I think markets are interesting. So if you look at, say, whatever it was a couple of years ago, so you have Adam starting, Mondo, and a whole bunch of others in the UK, all out aggressively raising funds for early stage high risk startups. You have to have a fairly simple soundbite to actually go to the market with. So they're selling a product which is, we're going to change everything, we're going to disrupt everything, it's all going to be great. Give us 150 million euros, please, or 150 million dollars, whatever it is that these guys have raised. And then they have to get down to the actual real business of actually building the banks that they said that they were going to build. And it turns out that they're actually really difficult things to build, not just the regulation piece, but it's just the actual infrastructure you need to build, and the trust that you have to actually create in order to make that happen. Personally, I believe that the challenger banks are actually kind of went in and believed their own view that they could change all of this, and they started actually trying to re-engineer the existing banking systems using new tech, and forgetting about, it's about the user experience, so they actually end up spending all of their time and energy actually doing the thing that they shouldn't be doing, which is what the banks are actually in a much better position to do. The stepwise way that the mainframes will become open to the actual general environment is something that I think should be left to the institutional banks as they stand, and that someone like a Mondo or a Number 26 or these guys should actually really focus on the promise that they made. But this is what happens in, it's a startup environment. You've got to raise money, you've got to tell a big story, and then you can't deliver, but that's understandable. And then you go to your first board meeting and you say, that big plan we had, you put all the money in, I'm really sorry, that's not what we're going to do. We're going to do this tiny thing over here. And it's usually a bit of a fight that happens until that's really right. Startups, that's how they work. But collaboration is always the future, right? The thing is that it's like, it's like, I don't know, you remember the .com and they thought, Enma and all these guys, banks are dead, or, it's not true. But I think there's a lot to be learned, say, from the original .com. Look at the companies that actually existed afterwards. They existed because they're the only ones that actually, whereas the only place you could actually deliver this product was actually on the web. Amazon, for instance, right? Amazon is the definition of retailer, right? If you're a retailer and you don't have an online presence, they'll look at you like you're an idiot now, and that wasn't really an option. eBay, right, which essentially, survived the .com crash because essentially it created this marketplace that couldn't exist offline. And I think that if you look at this and you think about it in the same way, you think, okay, what is it that someone's doing that can't be done without the fintech or without this new non-incumbent relationship? And actually, that's what we try to focus on, and actually not get into being the bank, not get into being a credit institution, and never going to lend money, never going to put money at risk, and never going to build financial products. I'm just going to work on a very simple product, which is about allowing people to communicate. So I think that we have to learn to collaborate, and it's just inevitable, but there is this period of time where everyone has a big fight, and then they all make up, and then we'll all be Sorry? Just dating. Yeah, exactly. Yeah, you know, it's like positioning. You know, eventually you find a way. And so I take a view to it like this. So I'm a mathematician by background, and I always look at things as models. And so, for instance, when I look at the pricing model for our product, if you look at the general market, the pricing model for payments is driving towards zero. There's an asymptote. It's about 0.001% or something. I just figured let's go straight to zero. What happens when it actually becomes zero? What do you do then? How do you actually change the way you approach this? And so I like to, when I think about problems, I actually look about and say, what's the future? What's a steady state look like? Not what's this sort of as you asymptote towards the bottom. I mean, you guys are financial guys. You understand asymptotes that happen all the time. So I look at those and say, this actually means you have to have a different approach. And so simple models help me at least focus on what's important. So collaboration will come as a very important. Sorry.
Yeah. I think related to that is if you are building a business, even if you're trying to like build a new fintech or whatever it might be, reg tech or whatever, I mean, there are so many things you're trying to do. If you can simplify your model, or if you can outsource pieces or work with somebody else as the back office, I'd advocate any of that, because you've got so much you are trying to create and do, and you've got markets and selling, and you've got all kinds of things. Any part you can farm out and do or work with a partner on, the better off you're likely to be, and the more focused you can be. No matter how great your concept is or your idea is, there will be competition. And some of that has come from just, the availability of funding, which is so different than what it used to be even pre-crisis. But there is so much money awash, particularly in the private equity world, looking for places to put their money. And if it is a big idea, there's money available for it. There's money available in the 100 millions. There isn't so much available in the 1 million, 2 million that can actually create a very good business too. But I think they're just echoing what Charles is saying about where you can have focus and not be trying to do something completely, because no matter what, if you get 100 million, which is a huge amount of money, whatever team that's involved in that will be overwhelmed by the complexity of that, even just managing the team that you're associated with and all that, and trying to build a whole entire business. So it's more mathematical about sort of saying there's only so much you can do, and the more complexity you have, the more it is to manage, and where you end up, wasting a lot of their startup money and funds that you end up getting. So, my advocate would don't take too much money.
So, and it sounds like it's cooperation between fintech and banks against the common enemy of central banks.
I'm glad you brought that up. Nice segue.
Brian, you mentioned a lot of money flowing around, and one area that VCs have really put a lot of focus on has been big data. Is it still the case? Is big data going to deliver? Is there a big opportunity still in data?
I wouldn't have a view about all this, what big data do from a tech perspective. Big data is not a challenge, or having a great analytics system is not a great thing. I mean, what a lot of the money has gone into there is sometimes front-end user experience around this. So I'm not a big fan. If I had a lot of money to invest, I wouldn't be doing it into big data, to be honest. Where I think, which is maybe related to it, where I think there is opportunities is around unstructured data. And that is where, we're all used to, in the tech world, historically having very, if you're a customer, there's a customer ID. If it's a product ID. And you can make this data all work together. The volume of social media data and, SMS and the ubiquity of that, the WhatsApp, the messaging, the variety of messaging, voice, all of these things, I think in the, trying to monitor that activity or make use of that kind of data is where there's opportunities. So a lot of big data, I think, goes towards analytics. A lot of money and a lot of products are created around that. And I think they will be limited by the fact that the data is not integrated. And you don't get the data streams you get from a bank or financial institution tend to be from that mainframe, and it doesn't really have all the rich data around us that you really need to do those analytics. But I do think there is going to be a wave of unstructured data monitoring that's needed. And that's, even from a central bank or regulatory perspective, I see it in some jurisdictions where there's some sort of lip service to this, pay attention to social media, make sure that your products aren't misrepresented on social media or whatever it might be. But the reality of the software and tools to monitor that area effectively isn't there. And it's an area of real growth of different technology, analytical models, and a different way of thinking about technology to the traditional databases. So that's my personal view about the big data.
Well, actually, Bill was just suggesting maybe we open the floor to some questions. How do you want to run it? We can continue on for a bit, or actually, are there any questions on anything we've spoken about, or anything you'd like to talk about? Just down the back.
Yeah, I can hear you.
Yeah.
So again, that was my
That's your mic drop moment, was it?
old technology. So again, so how do you compete? And it seems to be, just to me as a casual observer, so many of these payment apps and solutions in the market. So one is, how do you find a niche where you try you can get an edge, and the second one is interoperability and standardization. If there's so many of them, how do you look towards that? It is something you go the Apple way and say, no, it's our way, or we're not going to be interoperable, or because they're a dominant player that can do that. But for a small startup, I wonder how you see that and how you plan it in the future. Thanks.
Yeah, so clearly, I see myself as Apple, so it's reasonable. It's a really good question, and behind everything simple, there's always complexity, right? So interoperability, which is where we begin. So if you compare our product to other products in the market, there's a number of different ways to approach this. You can approach it as a bank, which means that you're restricted to the same banks, and then you have an app that sits on top of your banking system networks. Or you can be like a PayPal or a Venmo, which means you're completely off network, right? Which essentially means that you're actually running the actual stored value accounts yourself, and you're doing all that. And then there's actually a hybrid piece that kind of sits in the middle, where essentially you act like a stored value system, but you operate essentially as an institution. And that's essentially the choice that we made. And the reason why we made that choice is it gives us interoperability. One is when you set up an account on Plink, you get a BIC and an IBAN like a regular bank account, which means that you can actually use, in the European Union, you can use, or in the EEA specifically, you can use SEPA to transfer funds into those accounts because each one is individually addressable. The other side of interoperability is spend. So obviously, the way in which, say, PayPal and, Yo-Yo and a bunch of others go is that they create new tender types, i.e. an email address or a new type of card or whatever. Again, I took the approach that interoperability means that you actually produce a MasterCard or a Visa card or whatever, something that actually works in all existing points of sale, online and offline. Very important. That way, I now am interoperable with the networks directly at a way that's actually achievable and not too expensive for us to operate, which is very important. That allows us, I think, at the detail level to actually create a solution that's actually quite different to all the other participants in the marketplace. From a user experience point of view, what it means is that we can actually deliver on true value instantly, actual settled value instantly, because the key to moving money quickly is not to move it at all, right? That's like, it's one of the hidden rules of the world, right? And I think that we're approaching this like a Venmo or a PayPal or whatever would actually approach this problem, but we're actually implementing it like a bank would do it, right? And I think that those two things make us very different to everybody else that I've been looking at, apart from one competitor called Jiffy, which is actually part of step 2. I don't know if you know what this is. Anyway, so very important. I would love to have access to step 2. Otherwise, I have to go build it myself. But these are interesting opportunities. The difference that we can do then is we can drive huge scale. We can build new types of products. So once we're regulated and we have even just a payment institution license means I can build a staged clearing network. In other words, I can put money close to where it needs to be to speed it up. Our objective is to move all clearing of value to zero, right? That's our objective. I don't think anybody else has that objective. Everybody else actually wants to be a new payment instrument. Like Venmo was just bought by PayPal. Now they treat Venmo as another vector towards making merchant payment cash, which of course is all going to zero. What happens when it goes to zero? They don't care because they're just working on the middle ground, I think. So I don't know if that answered your question, but you gave me a good opportunity to talk about things I like to talk about. So thank you.
Pat Harker, the Federal Reserve Bank of Philadelphia. I was curious the Irish and European experience that we're starting to see in the U.S. Right? FinTech, there's been lots of innovation, and like many industries, some of that innovation is not always good for consumers. So for every FinTech startup that really enhances value to a consumer or small business, there are some who are just involved in good old predatory lending. If it looks a lot like payday lending, it's payday lending. And we're starting to see issues that we are struggling with as regulators. How do we create a sandbox to allow that innovation to occur, either outside or inside the banking system, right? And so we can relax some regulation for a while to let this happen. But at the same time, you see some of these folks that are, particularly in the small business space that I'm aware of, they're charging usury rates because the small businesses are desperate. So I was curious about what you're seeing here in these markets and how the central bank here or other banks throughout Europe are responding to that. By the way, I have to end. There's one business I just found out, which is actually kind of disturbing. They're working with puppy mills in the United States called, I won't tell you what the name of it, but you can look it up. You can lease with an option of owning a dog. And you get a 3-year lease. The puppy mills, typically the dogs aren't the healthiest dogs in the world. So after 3 years, you're kind of stuck potentially with this dog. And they charge $93 a month. Right. So that's the kind of, you could either call that an innovation or you could call it something else.
Well, given that a pet is meant to be part of the family, the next step, I presume, is leasing children. I'd say I don't know if we're seeing that much. You say some predatory behavior, and the guys may correct me here. There are some things around, for example, dynamic currency conversion, where you might see a foreign exchange transaction that I think in most cases favors then to a merchant and not a consumer, and it's not very clearly explained to the consumer that they're probably going to be paying more. But and again, this is a personal opinion, but I think the regulators are pretty good at sniffing that out. But I think coming back to sandboxes are we allowed to use that word yet? Because it's often a sharp intake of breath when you mention sandbox here in Ireland. And I think we were talking earlier in preparation for the meeting, we were talking about a sort of high barrier to entry into the payments company. If there was a sandbox, obviously in the UK and Australia, that could allow services to try, see how customers respond. Sorry, I'm doing all the talking here, and I should actually direct any questions. Brian, would you actually in our conversation brought up sandbox? Or was it Charles? Sorry.
Go ahead, Charles. Go ahead.
Something, just on the regulatory piece to start with. It's much easier to build a fintech company in Europe than it is in the US. In the US, I've got to do 48 licenses, I think. I think some of them copyright says like almost 48 licenses. It's like doing like California or New York is like as difficult as it's 5 times more difficult, let's say, than say doing something in Ireland. The value of being an EEA is that you get access to 508 million people with a single And that's actually a really, really powerful tool. Yes, I understand that there are differences on a per country basis for different types of regulation, and different regulators have different approaches and styles, which is actually makes it really odd when you've got like a common model, but then different approaches. For instance, the Irish Central Bank is focused on enforcement, whereas the UK Central Bank is actually focused on enablement. And those two things actually create this like imbalance where people go to the UK to actually set up a fintech because the regulator there is more likely to give you a license, which ironically works in the Irish market where you wouldn't actually have the same ease of access. So from a regulatory point of view, theoretically Europe should be a lot easier. The question on predatory and so on is that every market will have people who will buy products if they can't buy them somewhere else. For instance, payday lending is a really good example. There was a company in Ireland. My co-founder actually used to work for that company. UK, Ireland, whatever. I won't mention the name of the company, but they're payday lending essentially. They called it something else. But in certain situations, there are values to payday lending, right? I mean, is it better to pay off something that has like you get like a fine for not paying your utility bill, for instance. You look at the difference between the value of that fine and the cost of the loan, and then the rates don't look as usury as they first appear, for instance. So it's about understanding how to use those models in different ways. But I do think that people will go and buy products they can't get anywhere else. Or if you're a small business, you actually get a product that you want today. Like it takes 4 months to get an overdraft from a regular bank. It takes me 5 minutes to get a usury, but I have the money now. I can use it, put it to work, and give it back in the time it takes me to get approved. I've actually already gotten the money, made the investment, got the return, and yes, I've paid probably 5 times more, but I had it now, and I think that's really the types of products. The challenges, of course, is that the regulators are not informed enough about real time, right? So PSD2, for instance, which is an API system, obviously, it's not the API system that you imagine. It's just a read-only access to the existing banking infrastructure. It's not right. You can't create an account. You can't really write a payment directly. It's really just about reading the actual data. I do think that the regulator should actually have an element of PSD2 for themselves, so that the actual people who are actually regulated provide live feeds to the regulators, so the regulators could have real-time access to their information. Then big data you can actually use to actually really provide protection to the consumer, which is what this is about, right? It's like what's happening in real time, as opposed to finding out 5 years down the road that actually these companies have been, essentially lying to people and, giving them bad loans and then not taking their repayments when they give them and so on and so forth. So I think as an environment, I think Europe has an opportunity to actually say, here's a just add water approach to financial services, which is really technically integrated into a centralized system for oversight, which can actually lead towards a better compliance solution. That's, I think, would be a cool opportunity.
I just had one other thing about the concept of the sandbox in a more general way for regulators. This concept of, or this sort of traditional model of, well, let's design a rule, let's put it out there for consultation, and people write up about it and all of that. I will tell you, there's very little I've ever seen about an operational or technology input into those processes. The number of rules and regs that we see coming out that people are supposed to do, but are really operationally extremely difficult to do. And I even mentioned unstructured data, social media type rules that are out. That's just an example. If there is a sort of a way for sandbox to work for any regulatory environment, and certainly EU makes even more sense, I think, where you have some practitioners of financial services firms, somebody from the tech world as part of all that, and the regulator working to do this. No technology, when it comes out the first time, works really well, and you find things out over time. But it doesn't actually exist in the rule-generating world. There should be, well, let's sandbox it, let's keep it, let's prototype it, let's put it in a small place, and I don't mean just in a new fintech, but new rules and regs, and let it be used in a very small way, and then you'll figure out what all the problems can be with it, and you can then come out with a much better rule.
Yeah, that's that idea of sandboxing. It's the exposure for the regulators at a very early stage to what the new thinking is. So as you say, you're not trying to play catch up with the technology.
Yeah.
I think the technology will always be a step ahead, but that early exposure and getting involved with it does give them an opportunity. I think touching on the European model of standardization, the different regulatory environments, for the multi-jurisdictional, that idea of national discretion causes havoc. So somewhat, I suppose, like the US experience of 48 or so different licenses, you do have a standard license to operate across Europe from authorization in one, but you still have to go out and figure out what each jurisdiction is doing. For some of the very big multinational financial services providers, an example would be a micro-enterprise, or how micro-enterprises are treated in different jurisdictions causes havoc. They'd like to have a single solution and box off their customer segments into out-and-out standard consumer, the hybrid micro-enterprise, and then the corporate. But depending on where you are, micro-enterprise is or isn't a consumer. And to try and roll out a model that deals with that across Europe, which is supposed to be standardized, is difficult. And there's a little bit of me thinks that when they talk about full harmonization, that can only be achieved at one level by removing national discretion and properly harmonizing, or don't do it by directive, do it by regulation. There is already a mechanism there to say, here it is, no interpretation, yes, but you don't get to rewrite this locally. And I think they need to start thinking like that to get a proper, fully harmonized European market.
Yeah, another question over there?
Eamon Walsh from GMIT. Mine is a very basic question. What is fintech? Like, it seems to me it means different things to different people. Naturally, it's actually, I think, now rather a nebulous term, a bit like cloud computing, like that it actually means a lot of different things. It might mean payments, lending, there's the whole cryptocurrency thing, there's our compliance now. And it was interesting to hear you mention the back office, and naturally, you know, that's continually evolving, but that's not necessarily a new phenomenon. That's been around since mainframes were around, which is for decades, right? So it's really great discussion to hear you today. So I think I'm hearing that fintech is actually all those things.
Well, the Fintech and Payments Association, if you're willing to pay a fee, we will take anyone. So our definition would be very broad.
If you could make a payment.
I think you're right, it is all of the above. It's everything you've listed out. It's stepping into the right tech and sure tech. Anything to do under the broad banner of financial services, I think now falls under the equally broad banner of fintech. It's modernizing it, it's making it easier to deal with, using technology to simplify or enhance how the services are delivered. Be that front office or front end customer user interface or back end, taking some of the complexity like the middle and back office operations. Automation, we'll see developments in artificial intelligence, we'll see developments in bots in the middle and back office environment. It's going to be interesting to see how that plays out. But yeah, it is, I think, generally all of the above.
Yeah, I think I would agree it's all of the above. It just, I think, has become a hot term because of things like, obviously, the communication medium of the internet and the standardization and ubiquity of the same devices that can access that, and it's created all these new opportunities, whether it be at the consumer end or whether it be even in a back office end, and what it does. And then that's just, it's also come about just because there's a term, because VCs are putting a lot of money into it. So it's just a terminology around it and opportunity at the end of the day.
Within fintech, within FPAI, is the association thinking about having certain groups and then categorizing those groups somehow as a subgroup to FPAI?
Well, we have within the FPI, we have a number we're calling working groups. We have 3 at the moment. In fact, we have 4 at the moment, and they tend to focus on different areas. So 2 of the working groups are feeding into the government's IFS 2020 strategy. We want to develop a payment strategy for Ireland we have about 100 people from across different organisations who are now feeding into that, into those working groups. And they will produce recommendations which will then be taken up into the public sector and then that will be shaped into the financial sector. So we're sort of driven by those working groups, and we have two others. One is around regulation, which actually is the most active group, I would say, and it's the most active, most active, most membership. And we're going to start on diversity within fintech, and particularly focused on how we can encourage more women to choose fintech. And when those two IFS recommendations go in, we expect those then to turn into yet more working groups. We need to take specific recommendations out of that and execute them. But I don't know if that answers your question, Bill, but that's sort of how we see the structure.
It does. Thank you. I have a question for Charles. You paused when you were talking about the catch-22 regulatory issues, almost as if you were thinking back, should I do this regulatory thing or should I not go that path? And what it made me think of was Uber. In Pennsylvania, which is a state of 18 million people, and it's one of the states that President Harker has responsibility for in terms of the Federal Reserve. But in the state of Pennsylvania, Uber came in without the regulatory authority, and they started operating, and they were sued. The state said, we're going to sue you 10 million or something like that. And of course, it was a runaway success immediately. They didn't really care. Well, finally, they settled, not for maybe $1 million or something, I don't know, or 100,000, I'm not sure what the number was, but they forced the situation because at that point there were so many people using Uber in Pennsylvania that the state regulatory people said, wait a minute, what are we going to do here? We've got all these people using Uber. So could Plink go down that path and say, we're going to start without that regulatory authority, and hopefully we'll get enough users that will force the hand of the people forming the regulations.
In light of the fact that there's a lot of people in the room. So my private answer and my public answer. Yeah, exactly. So one of them is a bar conversation. So I would say, yeah, exactly. Yeah. So I would say to the question about Uber, would you go down the road and then pay it later? The difference between say Uber and say a financial product is that you get technology wrong, you lose some money, you get sued by a state or whatever. If I get financial services wrong, I go to prison. And that's actually kind of a big incentive to get it right. But the other thing is that obviously you're building a product for. Yeah, exactly. I'll figure a way out of it. I can dig. It'll take me 374 years to dig out. The interesting thing, as well as that, is you're actually trying to build trust with users. So it's very important that you're actually really open about what we're doing, and that we're open to regulators, and we have conversations, and we make sure we go by the letter of the law. I think that Uber used exactly the same strategy that a whole other industry used, which is the travel space. Hotel bookings, for instance. Hotel bookings are notorious in the U.S. because there's state tax and there's city tax and there's staying tax and everything else. Those companies never pay those to the cities, right, directly. They wait until they get sued and then they settle, right? So they have hundreds of lawyers sitting around, who do that, and that's their job, right? Essentially, is to, and in the industry they call it breakage, which is how much you lose to the, in the proceedings that will obviously follow. And Uber just have a bunch of people who come from that space, and that's it. Oh yeah, just go for it. We'll settle later. It's fine. No one's going to go to prison, mostly. I think that's interesting.
But Charles, is there any firm out there that has created and put servers and whatever in some small country, and effectively is doing something on social media or WhatsApp or something, attaching to all that messaging and creating some way of sharing payments without all that regulatory regulation around it?
Yeah. Well,
Bitcoin is,
one of those. So what you do is you go to the point of least resistance. So in Europe, sorry if anybody, you just go to Malta, and set it up there. And it's much easier, you know, you just rock up and you get a license, and then you can operate your bank out of there, and then you get credit institution pretty easily, and then you can actually operate. But actually, that's just a shortcut to, I think, a shortcut to what you really want is to, you want to build a global footprint. You want to actually change the way things work, and I think to actually do that, you've got to embrace the existing and then try to change it as you execute. Yeah, there are a lot of people who've been just like, just go all the time. It's fine. On the question on fintech, by the way, what is fintech? I always say that it's like a rebranding exercise. You know, when you have a company and they basically decide they're going to change their name. So what they do is it's called financial, and they want to move towards technology. So what they do is they have an interim branding position, which is fintech. Let's call it financial technology, and then eventually they just drop the financial and become technology. I think it's actually the transition of banking from being a sort of almost like a retail business to being a technology business, and I think that's where you're actually seeing that right now. So ultimately, you got to imagine banks will become technology companies.
It's back to, what's his name, Silicon Valley Bank. A lot of banks is they're run by bankers, not software engineers, and it's not, we call it money, but it's really just data.
Yeah, exactly. It is. Yeah, exactly. It's just data.
So it's just bits. Some people call it data, some people call it money, and at the end of the day, that's all moving around. So yes, we are moving from
like
finance to technology.
The complexity of a bank account versus, say, a Facebook account. Like the Facebook account is an incredibly complicated machine. They actually build like the data analytics you run across that stuff is really, really hard to do, but it's done incredibly well by those technology companies. And then, like, you know, it's practically a flat file, you know, the banking system. And you'd imagine that should be really easy to analyze, but it turns out that, you know, that's not, because a lot of the information that you need to know, what does that merchant code actually mean, and what does that reference mean, and so on. Just little things that the ambient data isn't available. I think that's the opportunity.
So you all mentioned unstructured data and you mentioned analytics. Can I just ask the question about what the data ecosystem is actually like here in Ireland? Is it a strong data ecosystem because there are a lot of fintech companies and we do have some big data houses here, or is it something that needs to be worked on more?
Kicking that to you guys.
I certainly don't think there's a data ecosystem that's a country-based thing. I mean, it's a global thing. Whatever you have to do, it has to be global. You know, in our business, it is, you know, all the companies in the world you have for a third-party vendor risk management. It's got to be a global security master. I don't know that you think about it on a country basis. I think the biggest challenge really actually where I, on the data side is, again, looking at it more from reg tech, back office, that world is, it's not integrated in any way in financial institutions. And all you've got is big silos of different sets of data, and no matter what you do, it's very, very difficult to integrate those. And that's where I talk about big data falling down in its promise for most financial institutions. It's very different in a Facebook world or a Google or all of those things. They are doing fantastic and very different algorithms there around searching, and what they do to make it faster is mind-blowing from a technology perspective. But that's irrelevant to financial institutions. So that's where I come from on the data side, because they can't make their data systems talk to each other. You know, it's failed world of data marts and information, you know, all of those things that you have they are very challenging in financial institutions to bring that data set together unless it's designed properly from the start, and budgets don't get driven that way. So that's how I look at data generally, and I'm not really sure what ecosystem is in the data world in a country by country basis.
So just on the big data piece, very simply, big data is actually a cultural change. Decision making with data requires the organization culture to change. So like companies like Facebook and Google and Twitter and everything else are data-driven companies. That's actually how they work. And so decisions are made where data is actually used as the method of making the change, not a hierarchical management structure. And that cultural change is much more important than the actual systems you build. You've got to listen to the data, and if you don't listen, you can't make decisions with it. So therefore you won't invest in it, therefore you will always have silence. And I think that's the big opportunity. And is there a data environment in Ireland? I don't think so. I don't have any data to support that though.
And I think the given the extraordinary rate of technology change, what should central banks and regulators be concerned about, or what should they look at when it comes to technology?
Yeah, I think regulators are already doing it, looking at cybersecurity, data privacy, and I think the financial institutions themselves have to be looking at that. I think that's really going on right now. Maybe there's a different comment on the consumer product world, but the one thing, going back to the cybersecurity or data privacy, if only we get standardized on it. I'll tell you that as a company we've about 450 firms on our platform. In 2014, we probably got 3, 4, 5 different cybersecurity questionnaires a year. In 2015, we got 50, and we're into 120 or something so far this year, and they are all expletive different. When the reality is, the same questions are appearing in every single one of them. The cybersecurity and data privacy, if you are investing in it, and for us and for many peers, it is the single biggest risk to a company like us. If there is a breach, we hold private data, we hold securities data, we hold transactions. It's the biggest risk to us as a firm. We will put and make that investment into it. But if it could only be standardized around what it is that is a good thing, and it is known, information security experts can define what is a good cybersecurity world. But the reality is, to get back to that standardization, everybody would benefit from a standardization around what it should be. Everybody would benefit from at least even just saying data privacy. Take a Massachusetts data law, for example, just say, make sure everything is encrypted in transit. Very simple, make that across a jurisdiction. At least it's something very, very standard, and maybe evolve to encryption at rest or something later on. But I think, so it's a long answer, but that standardization again in the cybersecurity would help everybody. But it is the biggest danger and the biggest risk that's out there.
I think that's right. Just finish up the standardization. I'd also like to see an element of consistency of message between regulators or advisors. We have the EBA technical standards which have come out, and they're, for example, on the issue of passwords and the use of passwords, they're talking about complexity and expiration times. We've got other institutes around the world, NIST and the CSG, saying that actually regularly changing your passwords makes them less secure. It's length, not complexity. So you've got a different message coming through. So as an institution trying to adhere to standards, you're getting different messages from different people. And if we kind of get a commonality around it, it makes it easier to adhere to that standard that we're asked to adhere to.
I have one thing to say about this, is that I think what's happening is that everything is done after the fact. So the regulator is now looking at what's the best practice today as opposed to what's the best practice in the future. Existing security systems that require firewalls and internal siloed systems are doomed to fail. Everything that has a moat will always be broken. So if your security systems do not support existing in the public domain, then they're wrong. It's really simple. And we have to actually embrace that idea, and that's actually really complicated to do. But it means that you don't have those huge issues. Say like Target, for instance. I can hack their entire database by getting access through their the system that they were using to drive their air conditioning systems, because they're inside the firewall. So by just creating a moat, you just got to fire something over the moat. Doesn't matter where it goes. In the case of Target, it was through the air conditioning management system they went through, and that allowed them direct access. So if they actually imagined that they were living on the outside and everything was actually in the public domain, and they had to secure it in that way, then they wouldn't have had that breach, right? And I think that this is how we've got to think about the security of the people. That's what the internet security will actually look like. I think it's going to be really hard to get people to go there. All the questionnaires I get from all the regulators about what am I doing to stop people accessing a machine in my office. And I go, I don't even have machines in my office. Like, I don't even have an office. Like, you have to have an address, It's just like completely bonkers. So just putting it in that way, I think it's important to see the world.
Well, I'd like to thank Brian, Charles, Frank, and Richard. And let's give them a hand, because there's three pledges. This wraps up our day here, but I think a number of people probably will gather in the bar upstairs. It's a cash bar, unfortunately. Last night was an open bar. But anyway, tomorrow, well, some people here are going to there's a dinner tonight at Peplo's. What time is that? 7:30? 7:30? And tomorrow morning, if you're on Jill's list, it's at Ivy House at 9 o'clock, from 9 to 12. And I think, Brian, we talked about, possibly you joining us. I don't know if Charles is going to, or Frank is available, or Richard. But Jill will coordinate that with you as well. So thank you all. And we'll see you tomorrow morning if you're going to be there. And if not, thank you for coming. Thanks to the Central Bank for their support. Appreciate it. Michael, do you?
Thank everyone for coming, and it's been a great experience. It's been a wonderful return to Ireland, and we hope we can do it again.
Yeah. All right. Thank you all.